Welcome back to the Brent Bruce Daily. Today is July the 28th, which is my wedding anniversary day, my 21st wedding anniversary. So my wife has managed to put up with me for 21 years. Can you imagine her sitting there all day long hearing me talk about mortgage-backed securities, inflation, and the economy when she's just really, probably tired of it. But she's hung out with me this long, and it looks like she's probably going to extend my contract for another year. We'll find out a little bit more about that here later in the evening when we sit down and discuss terms. But anyhow, want to jump back in here and give you an update on what's going on after the Federal Reserve increased the federal funds rate by 0.75% yesterday. Now, again, you know that increasing the federal funds rate does not mean that the home loan interest rates went up. In fact, we saw home loan interest rates go down by a full percent within the 2 weeks following the last Federal Reserve increase, which was June 16th. Now here we are, they increased it July 27th, and we saw home loan interest rates immediately begin to go down. And so far today, they're following suit, and interest rates are continuing to go down. So we're going to take a look here in just a minute at the Brent Bruce Daily scenario. But I did want to point out here, this little article right here, kind of interesting. It says the economy may look like it's in a recession, but we still don't know for sure. Now, today, the first report of gross domestic product came out, the GDP report. And normally people would say if there's 2 consecutive quarters of negative growth in the GDP, we are in a recession. Now, that is really the leading indicator. That is something that never before in history, since it's been recorded, have we gone 2 quarters of negative GDP and not been declared to be in a recession. But the declaration of being in a recession is not done just based on the GDP report. So there's some other things that go into that. Another entity actually will come out and declare whether we are in a recession or not. Now, I think it's interesting because they're basically, in my mind, they're kind of already preparing us for finding some way around saying the word recession. So we heard another analyst earlier today say that, well, maybe the first quarter shouldn't really count because we really had some problems with inventory and supply chain issues. Well, I don't know about you, but that still affects me, right? So just because it was because of supply chains or inventory issues doesn't mean that we're not experiencing a recession as consumers. So I don't really buy that. But I guess, a little bit of conspiracy or maybe a political thought here is that does the existing administration really want to declare that we just went into a recession right before the November elections? Or is there a way that we might be able to be unsure until after the November elections and then, come out with the final verdict as to whether we're in a recession or not? I don't know. Just something that came to mind. So where are we right now? Again, we had said yesterday we had a good day here. We had a good green day after the announcement by the Federal Reserve. We broke above, really lifted off of the floor of support that we had, which was the 50-day moving average, broke through the Fibonacci level at 100.603, and then came up against and went right through the Fibonacci level at 101.219. And look at this, bounced right off of the 100-day moving average. I mean, hit it and just stopped. And now we actually have an alert to lock, which means that we really see this as a very hard ceiling that we might not be able to as easily get above. But also take a look. This is something that we have been talking about for a few weeks. This here. Last time we hit this Fibonacci, it was a strong ceiling of resistance. We bounced off of it, and we were at 4.99% on the Brent Bruce Daily scenario, and we drifted away from that for, 2.5 weeks? Look at, we broke right through it. Okay, so again, we were at 4.99. We broke right through that ceiling of resistance that we've had for a number of weeks now. So with all the experience and the knowledge that you now have watching the Brent Bruce Daily, what does that mean has happened to home loan interest rates? So put it in your head, write it down, take a guess, and let's see if you are correct. Because based on the information that we see here today, a strong couple of days breaking above the ceiling of resistance that was at 4.99, we talked about, would we possibly get to 4.875? I said I didn't think so. I said, I think that we'll be at 4.99 with a little bit more of a credit, if you recall. But let's take a look and see if this is a big day. I mean, jumping right up to the 100-day moving average. Let's take a look at the Brent Bruce Daily, which is our very well qualified conventional home loan. And where are we? Boom, 4.875. So if you wrote down 4.875, you are wiser than I am. You're smarter than I am. You understand the market more than I do. Great job. I guess you're done here. But here we are, 4.875 with a small credit, $418. What if somebody wanted to go ahead and pay a point? You know, like, well, I'll pay a point. They're going to be 4.5. That's not even a point. That's about 0.9 of a point. Think about that. We were talking about 6% just a couple of months ago. And now we're looking at 4.875 with a point, 4.875 with no points. Okay, so that is a combination of aggressive bank pricing. That is a combination of very low margins at my company, Rancho Capital, that we are giving. I mean, you're not seeing this with your normal mortgage bank. You're probably not in the fours. You're probably at 5.25 to 5.3, maybe 5.125 with no points. But they're probably advertising 4.99, 4.875, but with points. So another reason that you really need to reach out to us if you haven't already start talking about how we can take care of your clients. But anyhow, here we are, 4.875 with no points, having a good day. However, I do want to point out, you notice that there was a lock indicator and that we bounced off of this ceiling of resistance. We were actually higher than we are right now. We were up about 50 basis points. So it really did bang off of this ceiling and start to come back down, which made us a little nervous that we were going to lose much of the gains of today and maybe drop back down to this now ceiling. Now this is a floor of support here at 101.219, which again is where the ceiling that we had on our last run. So hopefully we stay strong above this Fibonacci level, and then we have an opportunity to break above the 100-day Fibonacci level. And look at these runs. Look at how much room we have to go. Lots of room for improvement to where we can start getting back into the mid or lower fours without any points. So that is what is going on here today. Let me come back into the screen here. Keep me in your prayers for my negotiations with my wife this evening on extending my contract for another year. She only does it for a year now. We used to get 5-year extensions, but she really has dropped it down to only a year most recently. So hopefully everything goes well there. I will get back with you again tomorrow, and we will see if we continue this run where, again, the Federal Reserve increasing their interest rate is improving and reducing the home loan interest rates. Have a good day.